FMS is a proud sponsor and works closely and endorses Bill's company, International Lighthouse Group. It's a very important part of the puzzle is managing your shrink, and we can tell you that if you don't control your shrink, you're going to have a difficulty making a return on your store. The difference between companies that have a really strong shrink program and ones that don't often is 1 to 1.5% profit that they lose. So Bill, thank you for being on with us, and I will turn it over to you. One little housekeeping note, because of the number of people on the call, everyone's voice is mute, and what you need to do, if you have a question or a comment, please type it into the question box, and then we can certainly see that. So this is a one of a 3-part series. The next one is going to be November the 2nd, and then the third one is going to be November the 16th, and I think Bill has a slide detailing that out. So Bill, thank you for joining us, and take it away.
Hey, Mark, thank you so much. I really appreciate it, and thanks to everyone on the call. I know you guys are very, very busy, and for you to take your time out is an honor for both of us, so we really appreciate it. And I'm just glad to be where there's not a hurricane. I live in the south, and I live right on the coast where the hurricane just hit. And prior to that, I was in a record snowstorm up in Canada. So trust me, I'd rather be here talking to you guys than doing what I was doing. Like Mark said, what we're going to be talking about today is shrink and losses. But today is on POS and front-end accountability. And hopefully, I will give you things that you can take away immediately and start using in your stores this afternoon. And that's my goal. I'm not going to probably share too many things that are revolutionary to you. You've been in the industry a long time and know the business, but hopefully I'll give you things that remind you of things that you've forgotten or things that you should have been doing, or say, wow, we quit doing that, don't know why. So hopefully this will be a reminder, or you can get a couple of things out of it you can take back and start using immediately. The next presentation is on Wednesday, the 2nd of November, and that was on shoplifting and retail theft. Real-world solutions to preventing shoplifting, helping educate your employees, reducing your losses. There's some things that I know can help you reduce losses in your store. And then the last presentation is going to be on Wednesday, the 16th of November, and that is on DSD and vendor deliveries. I love that one. As a matter of fact, we just gave a presentation to NGA, the Retail Loss Prevention Share Group. I facilitate that, and we just gave a presentation on DSD deliveries at NGA this past year, which went over fantastic, and I'll give you guys a brief overview of that presentation. And I know there's some things that can help you there as well. And just as a reminder, if you type in your search engine FMS Solutions in YouTube, you will come up with FMS's solution page, which has tons of webinars that they have done. And this one, I believe, probably in about a week, will be up there as well. FMS will also have this presentation on their website for you. Not today, it'll probably be by the end of the week. But without further ado, here's what we're going to be talking about today. According to a 2013 supermarket shrink survey by FMI, they asked people, where do you think shrink comes from? The participants of the survey agreed that about 64% of shrink or losses is from operational error. Please don't get hung up on the word shrink. I know some of you track your losses, whatever. You look at gross profit. Some look at shrink. Regardless of what you look at it, what you call it, the bottom line is what is important. So let's talk about the bottom line. So 64% of participants in this survey felt that the losses came from operational errors. What we're going to be talking about is right here, this 36%. Mark was kind enough to send me the FMS survey that was done last year. While it's a wonderful survey and it does talk about shrink, they mainly focus on these operational errors. I think the word theft was in there one time, and it talked about shoplifting, so preventing shoplifting or something like that. So everyone focuses here. What I'm going to help you with is I'm going to focus on this 36% that is like the iceberg that the Titanic hit. If you don't know it's there, it can sink you. So we're going to cover this pertaining to, of course, and let's drill down on this 36%, and as it pertains to, here's how that 36% breaks up. 36% of participants thought that shoplifting was the cause of most of the loss. And then they said 8% of the loss, 8% of the loss comes from vendors, 25% of the loss comes from general employees, and a whopping 31% of all that loss comes from the front end. And that's what we're going to be focusing on today. Now, when you have front end losses and you think about theft on the front end, the first thing people think about is sliding. I want to show you a video of what that looks like. I'm sure you've seen sliding before, but this takes the cake right here. This is pretty brazen. You have another bagger right here. You've got a customer bagging. You've got customers back here. You've got customers here. Now watch this young man. 2, 3, 4 items, picking them up. Maybe one hits the scanner. Maybe it doesn't. That wasn't rung up. That wasn't rung up. That wasn't rung up. Does he look like he's scared of getting caught? And then he just goes to town. He is not scared of being caught at all. That tells me that there's little to no supervision on his front end. There's no one watching what's going on, so he is brazenly able to do this. This is what people think of when they think of front end theft. And yes, this happens. But I'm going to also share with you today things that you can look for as far as register manipulation, how people steal cash and also slide groceries other than just this. Now, all 3 webinars, I'll cover this information very briefly, but if you are out there thinking, I've got to stop front-end theft, I've got to stop DSD theft, I have to stop shoplifting, and you're looking for the thief, and you're only addressing the people you think, quote-unquote, are thieves, then we're missing the boat. The reason is that for every loss situation to occur, 3 things have to occur. And I've developed this over years and years and years and years of working in the supermarket industry and managing loss prevention departments. But 3 things have to occur for a loss to happen. In someone's head, psychologically, for a person to steal, this is what they have to be thinking. Follow along with me. First thing, for a person to steal, they have to have a need or a greed. They have to say, well, I need money, I'm a drug addict, or I need to pay my bills, or sometimes people are confusing today need with want. People say, I need a new cell phone. No, you want a new cell phone. I need a new iPad. No, you want a new iPad. And need or greed is very powerful. There was a young lady that stole from her register. She stole a bunch of cash when I was with Bilo Supermarkets. I interviewed her years ago. And she said, I had to feed my kids because my husband's in jail. I said, well, I'm sorry. And she goes, my husband's in jail because he beat me and I put him in jail last weekend, but I'm the sole breadwinner and we can't survive, so I had to steal to pay money to bail him out of jail. And then she went to jail. So need is very, very powerful, ladies and gentlemen. However, need or greed or whatever, what control do you have over their need and greed as an employer? Absolutely nothing. You've got no control. You have no control whatsoever. Nothing. You can pay them a wage and that's it. So what else has to be there before a theft can occur? Second thing is rationalization. Rationalization is nothing more than telling yourself it's okay to do something that you know is wrong. We do it every day. It's like the devil and angel you see in cartoons, the angel's on one shoulder saying, no, you shouldn't do that. And the devil's going, sure you should. Yeah, those are the mind games that we all play. And everyone on this call, everyone in your store, everyone in the United States, in the world really, rationalizes it's okay to do something they know is wrong. Everyone. I'll give you an example. I know all of us at one time, excuse me, speed. Some of us out there go faster than others, but when you do speed, you just don't say, I'm going to speed. Most people don't. They have reasons they tell themselves. Some of those reasons are like, for example, I'm keeping up with traffic, or this highway doesn't have a lot of traffic on it, or there's not a lot of cops out here. I'm in a hurry, or they just come up with all these rationalizations. My dad was a long-haul truck driver. His rationalization when he got the convoy was they can't get all of it. Well, he was barred from the state of Virginia twice for speeding, so obviously they kept getting him. But you tell yourself it's okay to do these things even though you know it's wrong. Now, rationalization is extremely powerful. Give you an example. There was a druggist, Robert Courtney, in Kansas City, Missouri. He adulterated cancer drugs. He would mix cancer drugs for a hospital close to him, and he said, I can make more money if I water down the cancer drug, make it last longer in the formula, and I can make more money. He got 30 years in prison. People died. There's tons of lawsuits. And he rationalized that he had to do this because he had promised his church $1 million towards their building fund and did not want to be embarrassed. Whether that's real or not, in his head, that was his reasoning for doing it. So rationalization is so powerful. And if you think, if rationalization is that powerful, what are the chances that your employees can possibly kind of sort of rationalize it's okay to steal from you? Some rationalizations that employees, customers, vendors have when they steal from us is they're a large company. They'll never miss it. They make tons of money. They're charging too much. I don't like the manager. You name it. They rationalize it's okay to do something. As an employer, what control do you have over their rationalization? None. What control do you have over their need or greed? None. The only thing you have control over is the opportunity. And that's what we're going to be talking about today, is denying the opportunity for theft, not trying to catch people stealing, but having the controls in place and the measures in place to prevent it. And this whole webinar series is based upon this theft triangle right here, the whole webinar series. I get asked all the time, who steals? Who steals? According to studies, 10% of the population never, ever, 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 ever steal in a million years. That's great. You hire those people, you never have to worry about them. 10%, on the other hand, will always steal regardless. It's like my brother-in-law. Loves to steal. Loves to just be a bad guy. I wish he would use his powers for good. I hope he's not on the call. But, and you can't worry about these two groups. You don't have to worry about the people that never steal, and the people that always steal, all you can do is just fire them and get rid of them out of your system. However, it's the 80% in the middle that are called basically honest people who may steal if the opportunity comes up, the right opportunity. That's your population. Think about it. 10% of your employees never steal. 10% may always steal. 80% are basically honest people who will only steal if given the opportunity. My father used to tell me something his grandfather told him. He said, son, locks are made to keep an honest man honest. And I asked what that meant. He says, well, if that shed door is open and someone wants to come in and steal my rake, they can. Honest man will steal it, and then a dishonest man will steal it. But if I've got my lock on that door and an honest man comes by, he won't break that lock. He'll just keep walking. A dishonest man will come and he'll break the lock and get on in. So what I want to do is put that lock on there to keep honest people honest. I was taught that when I was about 9, and that's been basically a business model for me throughout my life. The audits and controls that you have in place in your stores right now are there for a reason. It's not to catch people doing something wrong. It is to minimize losses. People may steal, they may take your money, but what you want to do is minimize the amount of time from the time the theft scheme started to the time it's discovered. Many times, the only time we discover theft is after it's been going on so long, and the employees or whatever get so brazen with it and bold and greedy that we trip over it. We trip over the losses. And then by that time, we've got a $40,000, $50,000, $60,000 loss. So what the audits do, and the controls I'm going to talk about, what they do is minimize that discovery time. May not stop it, but it's going to minimize the discovery time and therefore minimize your losses. So the first thing I'm going to recommend today is monitor and react to cashier performance. You all have different types of POS systems, so I'm not going to get into individual POS systems, but I'm going to give you some very high-level general things you can look at regarding theft and losses on your front end and behavior on your front end. Whoops, sorry. I want you to think about this statement. I recommend all of my clients that I work with to address the actual behavior on the front end of the cashiers, not what you think they might be doing. Let me say that again. Address the actual behavior on the front end, not what you think they might be doing. So if you look at your cashier performance report or you look at voids or refunds, don't think, aha, someone's probably stealing. Think about it as behavior. What behavior caused that refund to happen, or caused that void to happen, or caused that no sale to happen? If you and your people in the store, your front-end folks, address the behavior, it makes it easier to deal with versus, quote-unquote, trying to catch a thief. Deal with the behavior. And I'll go over that just a little bit. Here's the most common ways cashiers steal. Manipulating the register. Hand-keyed entries or open department rings, void and item corrects, and no sales. In my experience, those are the three, other than just sliding, those are the three most common ways people steal. And let me ask you, are you looking at hand-keyed entries? Tracking those? Are you looking at void and item corrects? Are you looking at no sales? If you're not, that's the first thing I recommend. You go, you pull the reports from your POS system. If you can't find it, go to your POS vendor, pull off your security reports, and start tracking these numbers and looking at them. Let me show you this. This is hand-keyed items. This is what it looks like. This is a receipt tape. It's a real receipt tape from a client. You see grocery 25 cent, grocery 25 cent, grocery 25 cent. You got all these hand-keyed orders for a total of only $8.91, but all these hand-keyed items. If you mark down, say for example, damaged merchandise, you put a line through your UPC, and you just put a price on it, yeah, you're going to have some hand-keyed items. But everyone on the front end, all your cashiers, are going to have about the same amount of hand-keyed items if that's all they have. If, however, you have someone that's got way more hand-keyed items than someone else, you want to address that. I'll show you how to do that. I was working with a client up in Pennsylvania, and an owner, and I asked him, I said, do you have many hand-keyed items on your front ends before I even got to the store? He said, nope, we don't. We don't have a lot of hand-keyed items, and I know this because we don't get a lot of the slips. I said, what do you mean? I don't understand. He goes, every time an item is not on file, a cashier's supposed to write down the item description and everything like that, and then that little slip goes up to our scanning coordinator. She puts that in the system, so we keep our hand-keyed items to a minimum. But I went into a system and pulled this report. I just said, give me all the hand-keyed grocery items for 1 week, and I got a grocery only, 1 week, 6 pages, 300 instances. The majority of them were between 50 cents and $2. The reason I was working with this client is that he was not making as much money as he thought he should make, and he brought me in as just to look over the store. That's the first thing that I found. They stopped this practice. They started getting with cashiers saying, no, use your scanner, use your scanner, use your scanner. Because if someone's hand-keying a meat item, you and I both know they usually put it on grocery, and that messes up your department totals. So focus on having everything scanned versus hand-keyed, if at all possible. This is a cashier performance report, that spreadsheet I put together for another customer. I think this was Dallas. They had problems on their front end, and so I pulled all the cashier numbers, and you can see I sorted them high to low, 18,000 down to like 2,000. I kind of cut it off there. And If you look in red, you look at this first one, you've got IS cancels or void. This person had 133. This is for $185, 1.4% of sales. They only had $9,000 in sales. This person had $18,000 in sales, and they only had 91. So you've got to ask yourself, why? On items keyed, hand-keyed items, we were just talking about that. This person had 9,000 in sales, had 139. The person that had double their sales only had 117. So why would a person with half the sales have way more hand-keyed items than that person? This is no sales. The person that had the most sales in the store, 18,000, only had 20 no sales for this period of time. I think it was a week. This person only had 3,000, had 47. Worse off, this person here had 64 and only had 2,000 in sales. So the thing you have to do is find out why. And what I recommend you do is this. And well, it's like, this is my dog. I love this dog, but this dog loves to go after and chase cars. And I've always asked him rhetorically, what in the world are you going to do with it when you get it? So you can tell your store management personnel or the front-end people, please go watch for refunds, watch for voids, watch for IS cancels. But what are they going to do with it when they get it? That's the problem. We tell them to go look for something and give them no solution how to handle it. Here's what they are to do. If, let's say Mark from the line. Mark is a cashier in my store, and I'm looking at no sales, and everyone has about 20 no sales in the week, and Mark has 100. As the front-end manager, whoever's over the front end, designate someone, I'm going to sit down with Mark, and I'm going to say, hi, Mark, I'm tracking no sales. You have 100. Everyone else has about 20. So, Mark, why do you have so many no sales? And then I shut up. Silence is deafening. You want them to answer, not answer for them. And they will start giving you reasons. Some of the reasons that I've heard are, well, I forget to give customers change. Well, what are you going to say to that? Well, you're going too fast. You have to slow down. We want it to be accurate, so make sure you give them their change while the door is open. Why else do you have so many no sales? Well, I give change to customers. Well, we don't want to do that. We want to give change up at the register because a flim-flam artist can come in. So we give registers change at the office. So why else do you have no sales? And you just go through the list of things. And you have 10 per week, 20 so that leaves a lot. Why are you having so many? A manager that I know asked a cashier, he went through this exercise like I instructed him to do, and he called me the next day. That's what I found out. The reason this one cashier had so many no sales is that when she was hitting no sale to pop the door open because it caused the computer clock to go off. He said, so I told her to get a watch. So what you want to do is find out why, let them know it's important that they minimize, and then the next week you look at that cashier performance report. Ladies and gentlemen, I can guarantee you that that number is going to be very, 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 very low. Then you go back to that person, pat them on the back, and say, great job, I knew you could do it. If that was a good employee who needed more training, you just gave them that training. You helped them. If that was an employee that was stealing through no sales, then you just put them on notice, I'm watching this. Now, they'll stop that way. They may start another way, but you've shut that down. That's what this is about, shutting down the avenues. Thresholds on the front end that require management override. What I recommend is voids. People should be able to do voids $5 or $10 before needing a management override. Voided transactions, I think any voided transactions should have a management override. Maybe you can put a threshold on it of $10, but they should have a threshold and require a management override. Suspend orders definitely should have management override. The reason that you want to have the management override is, again, to ask why when it happens. So if I have a cashier that has voided transaction and it's like $30, I say, why do you have a voided transaction? Well, I messed up. I double keyed this. I triple keyed this. Okay, Mark, you need to be a little bit more careful on the front end. That's great, no problem. You key flick it, you scan your card, whatever. But then if you have to go out there again in an hour, oops, I got to do a voided transaction because I forgot to scan this, or I didn't scan that, or I double keyed, I made a mistake. Voids are not a bad thing. Repetitive voids, repetitive issues are bad. And by having management go out there for these transactions and asking why will help you manage your front end. The other thing is, this was in, I forget where this was, I was helping a client, I think in Tennessee. I always go in and they say, oh, we have a threshold of, like, for example, $10 to do a void. After that, you need a management override. So I go out to a cashier on the front end and I say, do a void for me, hand key it, make it $50. And about half the time, I'm able to go out there and do a void for $50, even though they say that there's a threshold on it. For some reason, it's not there. So what I recommend is, if you have thresholds right now, go back to your store, test and verify those thresholds, that they are, in fact, up and working. If you need to adjust it, please do so. We'll go back to transaction cancels just a moment. This is an example. I'm just going to run through these. This is an example. You sort the net sales. These are all the cashiers for this particular time. And this cashier had 38 transaction cancels for $691. That's not a lot of money. But if you look, this one has 25,000, only 6 transaction cancels. This one has 36, only 4. This one has 49. Yes, they have more sales, but they have so many more transaction cancels. Again, you want to talk with this cashier and say, why? Because what cashiers can do is they can ring up an order, cancel it, let the customer have the groceries. That's an easy way of sliding. Error corrects. Same thing. You sort them high to low. You look at this cashier only has 17,000 in sales versus 49. This person has 101 for $1,700. Error corrects. That's when you scan an item, so oops, I messed up, and you correct it. Why does this person have so many more than everyone else? That's the way you ask the question. These are the things you look for. That's the way you ask the question. No sales. And I was comparing, this one company had 3 stores, and he said, I want to know what my 3 stores are doing. I'm going to compare them. So I did. And here you can see, obviously, the store with the second highest sales, 2 million, 1 million, 1 million 7, 1 million 2. This one had more no sales, 1.2. So now they know this store is worse, so they went back and drilled down to find out which cashiers are having the most no sales and why, to try and reduce those. The way cashiers steal through no sales, I don't want to be too pedestrian, but very simple. Someone comes up to buy a carton of cigarettes or whatever it may be. Cashier knows how much it is. The person gives them a bill, cash. Cashier figures it up in their head what the difference is, or they do it on their phone, and they give the customer the change. They put the bill or the money in their register. They build a bank. They take it out at lunch or at the end of the day, and they will walk away with $100, $200, $300 of your money that day. Not all those sales are bad, but you want to keep them down to a minimum so this can't happen. Voids. Again, this is comparing those 3 stores, 2 million, 1.7, 1.2. They had $9,000 in voids, more than the store with the highest sales. The dollar, 127,000 versus 66,000 for the highest volume store. Again, why? There are 3 reports I recommend that you get with your POS vendor, and ask them for these 3 simple reports. Your systems may have it, don't know, but pull these 3 reports. A short void report shows all voids, every checker, and it's sorted by checker, sorted by dollar amount. So it's very simple to look at that void report and saying, all right, of my 10 cashiers, these 3 have the most voids. Well, yeah, these are my 3 highest volume cashiers, so they're going to have the most. But if someone is not one of those highest or cashiers that work the most, their voids are going to be really high. Again, you want to ask them why. Just gives you an indication. Refund report shows all the refunds issued and sorted large to small. Lastly, a negative transaction report. This is critical. Please underline this, highlight it. This is the most important thing I'm going to tell you all day. A negative transaction report shows all transactions that resulted in a negative total, sorted large to small. In Virginia, there was a company that had a cashier, an office cashier, young man, went to college, and he needed money, so he would just do void $300 and a key flip in the office. And that resulted in a negative sale of $300. They didn't have this kind of report. He went like this for about a year. He got them for $47,000 in a year. Just $300 here, $300 there, and he just went to town. A negative transaction report will stop all that. We'll show you immediately why is this going on. And again, remember, it will reduce the discovery time. Returns. Make sure your returns are being scanned. These are scanned. You see Maxlite charcoal, Palmel, Purina dog chow, etc. This was the same hand keyed returns. Grocery $100, meat $94, grocery $50. These make my spidey sensors go crazy. So you want to tell people whenever possible, you want to scan the item when it's returned. If they don't have it, yes, you can hand key it, but you want to keep these to a minimum. Recommend also that you track your refunds for another reason. I developed this for a customer. They wanted to know why there were so many refunds. So we developed this. And there you have the customer's name, the reason, the date, they sign it. Then what they did, they took the refunds that were for product quality, like in produce or deli bakery or whatever, and gave them to the department heads. Each department manager had a mailbox. They gave these quality refunds slips to the department heads to say, hey guys, if you've got a problem with this potato salad, for example, you got 4 customers bringing back saying it tastes like vinegar, you got a problem. Or it's bad meat, or whatever it may be, but it tells the department heads what's going on in their department quality-wise. So it's not just for theft and fraud prevention, but it's also for quality as well. Now, I'm sure most of you have closed-circuit television. If you have CCTV, make sure one is over your front register where your refunds are done. And then what I recommend you do is that you look at all refunds or negative transactions over a certain dollar amount and audit those. Let me see what that looks like. Let me show you what that looks like. This is, I recommend $50, but here you go. I can get this to work. This is an office cashier. This is where the refunds are done. She just did a refund. Key flick. Opens the drawer. Takes cash out. There's the receipt. Throws the receipt away. Cash goes in her pocket. I know you think I'm paranoid and I think everyone steals. That is not the case, ladies and gentlemen. By far, that is not the case. We had a president once, Ronald Reagan. He said, trust but verify. I want to verify. I trust everyone, but I also verify that I have the controls in place to make sure that it keeps them honest. On this particular case, if you see a cashier that does a refund without a customer present, you want to ask them, why did you do a refund without a customer present? Not that you're stealing, but a customer wasn't there. So why did you do a refund without the customer there? Now, if you saw them put the money in their pocket, you should be calling the police department. But if you didn't see what happened with the money, you want to ask them, why do you do a refund without a customer present? It should be a three-party transaction. I mean, it should be the customer there and the office person. But this will help you identify problems with refunds. Speaking of management override, this is a management override card. Whether you have a key or a card. A lot of people are going to the scan card. This was a client of mine. I went in, and there's a little plastic basket, and this card is under the counter in the at the service desk. Everyone used this card. It says manager on it. This card to override everything out there. One card, one number overrode everything, and anyone can use this to override anything. Ladies and gentlemen, this is the keys to the kingdom. If they've got that override card, they can do anything they want to, and you're dead. So go back and check, do we have individual numbers, individual cards or keys for everyone that has management override? Also, if you have a management override card, don't write the scan bar number on it or don't have it printed on there, because you don't want them to know what that number is. You want them to scan it, not hand key it in, because if they hand key it, some very smart people can see them hand key it and copy that number. Also, assign a standard 3-digit identifier to management override numbers for those with override authority. Every store has the capability. If you have the capability to do scan bars, you can add 3 digits on there to identify folks. Let me show you what that looks like. Like store director 001, assistant manager 002, head bookkeeper 003. That way, whoever's looking at the cashier performance report or any kind of journals will know it immediately which person overrode what transactions. So if you get a questionable transaction, you look on there immediately and say, hey, I know who overrode that transaction. Lastly, it might be good to go back and make this happen and put teeth in the management override card program. I understand that this management override number must not be shared with anyone else or copied in any form. If I allow anyone to use my management override number, make a copy, blah, 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 I'll be subject to this for an action, I'll kill you, whatever. But have everyone sign this, put it in the personnel file, and let them know this is important. You may even want to reassign the management override number. But these are the keys to the kingdom, and this is the first step in controlling your front end. Employee purchase policy. Do you have an employee purchase policy? What this is do not, if you can, let any cashier go through any other cashier's line to be checked out. I know it's tough. What I would do is have them go up to the office to be checked out, or have them go through a single line, and maybe in your store, if you've got 15 cashiers, assign 3 cashiers as the designated cashiers that can ring out people. These 3 cashiers, and you tell these 3 cashiers, I trust you, I know you're tough, you won't succumb to peer pressure, you are the only 3 that are allowed to ring out employees. The reason for this is simple, peer pressure. What your cashiers are doing, what I have seen cashiers do in the past is that they will ring each other out. They will give each other breaks. They will help each other. I interviewed a young lady in Durham, North Carolina years ago, and she sat down with me. She was caught in the attic sliding, and she said, Mr. Alford, I promise you I'm not a thief. I am not a thief. And she was crying. I said, well, I'm sorry, but the manager caught you giving groceries away to Sheila, another cashier. She goes, exactly. I would never, ever give groceries away to customers. I only help my friends out at the store. I'll never forget them saying that. So have some type of employee purchase policy to prevent that. Again, the opportunity to prevent that. I'm going to show you a video here, and I'm not going to tell you what she's doing. You figure out what this young lady is doing. And you will see red come up on the screen when she misses an item. She's doing something with that hand. She missed that. I wish I could hear you guys. I'd love to say who got it first. What this young lady is doing is texting. We tell our kids, Please don't text and drive. It's dangerous. Well, you need to have an edict. Please do not text and scan. Have a rule: no cell phones at the register. Don't use them. So whether it's theft, whether it's unintentional, it doesn't matter. It's still loss to your company. So no texting at the registers. Employee purse or backpack storage. Please, lastly, this is very simple, that employees should not be allowed to store their purses, backpacks, etc. at the registers and manager's office or in the cash office. For example, don't do this. This was in a cash office. Pocketbook's right there beside the, this is where they check out the cashiers. This is a pocketbook. This is on top of the charge accounts in the store. I had to remove the lady's pocketbook in order to get to their charge card in the office. This is in the cash office. Open pocketbook, another pocketbook in the cash office. This is an employee's pocketbook at the register. Again, ladies and gentlemen, I'm not saying that these people are bad or will do anything. What I'm saying is, by allowing this, we are allowing them to have the opportunity to possibly take money. Of course, they can take it and stick it in their pocket or shoe or whatever, but this makes it so much easier to do. Just please, please, please remember, in closing, what I said earlier, you can't control the need or greed. You cannot control the rationalization, what goes through people's heads. The only thing that you have control over as an employer is the opportunity. And there are a lot of, I mean, this is 45 minutes. I've got a whole, when I come in to customers, I work with independent retailers around the country, and I'll walk in and I'll look at the front end, the back door, I look at your departments, I look at your accountability, I look at procedure, I look at everything. And I give you a customized report for your business, what you need to do or what I recommend to help you prevent losses and keep the money in your pocket, real world stuff. And I love my job. I absolutely love it because I like working with you guys. And if you have any questions or problems, you can get a hold of Mark, get a hold of Eric at FMS. They can reach me. This is my telephone number, my email. Be more than happy to help you any way that I possibly can. I believe that's my time. Are there any questions?
Bill, I appreciate it. Thank you for coming on here.
Sure, Mark. Thank you for having me. I really appreciate it. And I look forward to seeing everyone at the next, or listening to everyone at the next webinar.
Yeah, and I would just like to encourage the companies that are on here, if you have never engaged a company like Bill's to come in and do a security risk management audit, you owe it to yourself, you owe it to your company, and quite frankly, you owe it to the rest of the employees, because it's valuable. If you've never done it before, you should really consider it. So one of the reasons that we wanted to focus on this three-part shrink series is that important. We want our customers to do well and to make a good return and be in the top 25% performers. We do this survey every year for NGA, and the average profit last year was 1.6%. Well, that's pretty good. But then we look at the top 25%, and those guys make between 3.5% and 5%. And I can tell you, it's a whole lot, from personal experience, it's a whole lot more fun to run a store making 3.5% rather than 1.5%. And the shrink control is a huge portion of this. So anyway, thank you, everybody. We will have this video in a YouTube form in our FMS YouTube channel. And if you want a copy of the presentation, just email us, and we'll be happy to do that. Thanks again.